Every time the world panics, every time the stock market plunges, and every time ordinary people fear losing everything, someone else is quietly hitting the jackpot, and it's almost always the same group of people. Billionaires, they don't fear crashes. They prepare for them. They profit from them. And in some cases, they even help create them. Tonight, we're exploring how billionaires manipulate financial chaos to get even richer, and why these crashes are rarely as accidental as they seem. If you were to plot every major financial crash in history, you'd start to notice a disturbing pattern. The ultra-rich don't just survive these downturns, they actually grow their wealth dramatically right after them. But why? How is that possible? It's because in every crash, assets are transferred from weak hands to strong hands. When regular people, driven by fear, panic, sell, their retirement savings, their stocks, their entire future, billionaires see a massive clearance sale. Everything stocks entire companies. Land suddenly becomes incredibly cheap. Crashes essentially reset the game. But only the players with mountains of cash and insider influence get to win. A billionaire doesn't just wake up one morning and wait for the market to crash. They anticipate it. They're constantly tracking critical data points that most of us never see. They analyze liquidity, credit cycles, insider lending stress, and geopolitical pressures. They see the danger signs months, sometimes years, before anyone on social media even catches a whiff of it. The key tools they use are far beyond what's available to the average investor. They have private economic research teams, insider access to CEOs and policymakers, predictive AI models that crunch insane amounts of data, and complex financial instruments called derivatives, which are specifically designed to profit from market volatility. They also have immense political influence, which can shape regulations in their favor. By the time the public finally starts to panic, the billionaire already has a detailed, multi-step strategy in place, ready to execute. Think about how quickly markets react to information. A single tweet from a prominent figure, a casual comment during a CNBC interview, a leaked internal memo. These things can move billions of dollars in an instant. So, when a billionaire openly predicts a market crash, it's not just harmless commentary. It's influence. It actively creates fear. It encourages sell-offs. It can even become a self-fulfilling prophecy, sparking the very downturn they claim to be warning about. Now, imagine dozens of these powerful individuals doing this quietly, behind the scenes, coordinating their messaging. At that point, influence becomes a form of market engineering. Before a crash even begins, billionaires are often loading up on specific financial tools. Things like put options, which give them the right to sell an asset at a set price, or short positions, which are direct bets that a stock's price will fall. They use credit default swaps to bet against the stability of companies or even entire countries. They pour money into inverse ETFs, which are designed to go up when the market goes down. These instruments don't just protect their existing wealth from a downturn, they actually multiply it when everything else is falling apart. During the 2008 financial crisis, for example, some hedge funds made billions of dollars in a matter of weeks by betting against the housing market long before the public realized anything was wrong. And during the 2020 crash, a select handful of billionaire-led funds made a fortune as the global economy came to a screeching halt. When you can profit from disaster, disaster doesn't look so scary anymore. In fact, it looks like an opportunity. Once the panic is fully set in and prices have hit rock bottom, a new phase begins. Acquisition mode. This is where the real wealth transfer happens. Billionaires and their private equity firms go on a shopping spree. They start buying up struggling companies that can't weather the storm. They acquire innovative tech startups that have run out of cash. They snap up commercial real estate, entire city blocks, for pennies on the dollar. They can even buy up entire sectors, like airlines or energy, all at massive discounts. Back in 2008, private equity firms purchased corporate empires that were once worth billions for a fraction of their value. And in 2020, billionaires bought up tech stocks at prices the public, who were selling in a panic, couldn't even dream of getting. Every crisis becomes a chance for them to consolidate power and own a larger and larger piece of the economy. But the story doesn't end with just buying the dip. Because once the billionaires have filled their baskets with all these discounted assets, something predictable happens. Governments and central banks often step in with bailouts, stimulus packages, and quantitative easing, all designed to pump money back into the system and push market prices back up. And who benefits the most from this recovery? The very same wealthy individuals who bought everything when it was at its absolute cheapest. It's a perfect closed loop. They predict the crash, they influence the crash, they profit from the crash. They get bailed out by the recovery, and then they ride the wave all the way back to the top. Meanwhile, ordinary people who sold at the bottom recover slowly, if they ever fully recover at all. Market crashes aren't just economic events. They're deeply psychological events. Fear spreads faster than any virus, and billionaires understand this human element perfectly. They count on the public panicking. They rely on emotional, fear-driven selling. They depend on the widespread belief that the world is ending. Why? Because widespread panic makes valuable assets incredibly cheap, and cheap assets are what make the rich even richer. If you look at the data, after every single crisis, economic inequality grows. After every recession, the total wealth of the world's billionaires hits a new, staggering high. Crashes are not glitches in the system. They are a feature of the system. It's a system designed so that those with immense power, capital, and liquidity will always come out wealthier on the other side. And unless there is a fundamental shift towards greater transparency, and unless this kind of sophisticated financial manipulation is exposed and regulated, this cycle will just repeat itself again and again. Market crashes shape the world we live in. They determine who owns what and who holds the power, but they don't hit everyone equally. For the general public, they are unmitigated disasters that can wipe out a lifetime of savings. But for the financial elite, they are meticulously planned opportunities. This is how they manipulate downturns to climb even higher, while everyone else is just struggling to stay afloat. Thank you for watching. If you found this breakdown insightful, please consider liking the video and subscribing to the channel for more deep dives into the systems that shape our world. We'll see you in the next one.